Welcome back. ICICI Bank stunned the country over the weekend when it announced that it is raising the minimum required balance for its savings account to 50,000 rupees. That is 5 times the previous minimum balance requirement of 10,000 rupees. ICICI's hike in balance is seen as being prompted by a desire to serve only richer people who can bring more business to the bank. The Reserve Bank governor, however, when asked, reacted by saying that Reserve Bank has no regulations governing minimum balance. But a reading of the master circular shows that all charges have to be reasonable and commensurate with the cost of rendering a service. This is an overall grandfather clause. Importantly, most PSU banks have nil minimum balance requirement so that they can cater to all sections. So is the ICICI move starting a new elitist trend? Should such a decision be left only to banks with no Reserve Bank intervention? And anyway, how does this move help ICICI itself, since all banks seem to be actually crying for savings bank deposits? For all these questions, I'm joined by Mr. SS Mundra, former Reserve Bank of India Deputy Governor and also a former chairman of BOB. So he comes with 2 hats, really. I'm also joined by Pranav Gundlapalle, the senior analyst India for financials at Bernstein. Gentlemen, thank you very much indeed for joining us and sparing your time. Mr. Mundra, first question to you. Your first impressions. What do you make of this huge increase in minimum balance by ICICI?
Thanks, Latha. And absolutely right word used, huge increase. I would start with saying some increase over a period of time, inflation adjusted, income level adjusted is something which every bank would like to do. But by any standard, it is a huge increase. But let me tell you, if you look at the statutory viewpoint or the regulatory viewpoint, I think bank is very much within its right to do this kind of increase. They have not violated anything. You will also look that existing customers would continue to be, shielded from this increase. The Jan Dhan account or the basic saving bank account or the salary accounts are also excluded. So technically, purely technically, I mean to say they are within very much their right. But I would say from the messaging perspective, I would not use the word morally, but from optically, and also considering that, inclusive growth is something which is a kind of national mission. And banks, all said and done, they are commercial entities, they work for profit, but they are public utility, they are public goods in some sense. So to my mind, from that perspective, I think this increase, I would not say that it looks very good. Having said that, I would just like to, add 2-3 points to it. Let's say last revision they did in 2015. So from that till now, maybe the per capita income in the country has almost doubled. Had it been an increase from, let's say, 10,000 to 20,000, probably it would not have raised any eyebrows. It would have been in normal course of business. The second thing, today, if you look at their structure, so all the bottom of pyramid consumers in any case would continue to be, these bank services would be accessible to them because of the point which I mentioned earlier. People with good income to spare would also be able to maintain. But a large middle, self-employed, gig workers, that bracket is completely getting excluded. And where I think it comes as a big shock to the exclusion. Just a couple of points. Technology, now they have also revised their service charges together at the same time.
Yes.
If you look at the construct of service charges, there will be a huge deployment of technology to manage those kind of brackets and the combination. So I think with the technology, one could have managed these accounts as well. I think the desire is rightly to save on their operating costs, maybe bring more operating efficiency. But I don't find it to be argument to be very, very acceptable in that.
Okay. Well, let me put some points which I got from the bank sources on the table. It is not applicable to existing accounts. Even for prospective accounts, salary accounts will be excluded. So, CNBC's salary account is with them. fresh people in the salary account, or even new companies, if they give the salary account, will be excluded. They can continue to maintain. Pensioners will be allowed. And premium educational institution students are going to be allowed. I think they see them as prospective customers. As well, as you said, the basic savings is allowed. Pranav, I have two questions for you. The first one is, does it really help margins? It seems to be that kind of a move.
So I think my view, it is actually a very good move for two or three reasons, right? So one is that I see limited downside in terms of loss of deposits, just given the average balance sizes in savings accounts for private sector banks, or specifically for ICICI. I think you're talking about excluding a very small part of the balances. That's number one. Number two, I think it's also a good risk-reward trade-off, because we've seen that the risk of a huge increase in the number of accounts hasn't always been good. I mean, it's been actually quite bad for players like, Kota, Paytm, all those who had a huge influx of customers because of the lowered bar have actually suffered, actions from the regulator for falling on KYC norms or other reasons, right? So it's always not a great idea to just let in a large number of customers, because there is cost, there is compliance requirements that comes along with it. And the third one is also, I think, given the regulations that already exist, if you take a savings account savings account as a product, given a lot of the elements of it is regulated in terms of the fees, the number of ATM transactions, interest rates are also, while deregulated, it doesn't really change a lot between banks. So this is in some sense a forced move as well, because this is probably the only lever a bank has in order to maintain the profitability of a savings account product. And I would not be surprised if some of their peers actually follow ICICI because the unique structure of the competitive environment will force the banks to actually go down this path.
Okay. No, actually, there was no problem of influx and a poor KYC in ICICI's part. This has come quite unprovoked, and it is clearly only probably cost and margin driven. That was what sources told us. I don't think the KYC argument, but I take your point. But really, will you increase the margin, Pranav? Just because of this, do you see a quarter, 2 quarters, a year down the line, margins improving?
So just to clarify, what I was referring to was adding a huge number of accounts without commensurate additional balances involves a cost. And if you fall short of investments on any of the KYC or the operations required, it could result in a big one-off costs, right? Regulatory actions, etc. Now, will it help the bank? I think the answer is yes, because if you look at the costs of providing a savings account, that largely remains same irrespective of the balances. So over a period of time, I think it does two things. One, it will lead to actually increase in the average balances, because I think today the cost of opening an incremental account is almost gone to zero. So now that you've set a 50,000 rupees bar, I would expect a lot of, and the minimum balance at at almost all the PSUs are today at zero. I would expect some migration of balances from those accounts into an ICICI to maintain the minimum balance required. So that should be a positive.
No. It is not for existing accounts. So migration will not happen, no?
Let's say I'm opening a new account. I have a choice. Let's say I have a 30,000 rupees somewhere. And earlier I could get away by leaving 20,000 rupees now with ICICI that I open. Now I would bring in my 30,000 from another bank account and ensure that I maintain the 50,000. So you can't differentiate. I mean, given that you have fintechs being used for all the high frequency transaction, you can't persuade customers to move move completely to, let's say, banks that invest in technology. So the only way left is this, right? So I see that as...
No, I personally, I'm trying to wrap my head over why would I open an account with ICICI? I can't find any reason. I mean, 2.75 is not even attractive, and I have to keep 50,000. It is not making sense to me from a customer angle. But for the bank, maybe there is a saving in cost. But Mr. Mundra, I want to take this public interest angle that you're talking about. Yeah. If there is a set of banks which follow, at the moment it doesn't look like many banks will follow, because HDFC for the merger reasons is still dying to get as many deposits as possible. They perhaps will not join the queue now. And I guess Kotak also is yet grown to that level. They will also not follow suit. Maybe Axis will. I'm not very sure about that either. So it may not become a trend, but if it does, like a year down the line, if HDFC Bank also joins, then do you think Reserve Bank has to sit up? I mean, you can't have two of the largest banks, two of the top 4 banks, refusing to serve people who cannot bring in 50,000. Then it will become public interest. You know, banking, in a way, is like electricity. Okay, electricity, only one person is allowed to serve in one area. But if there are 2 people and one person says, I will not serve any of the juggi jhopadis, I will only serve the apartments, surely the government will step in. So do you think that at some point the Reserve Bank may have to step in?
See, Latha, that exactly is the point I mentioned in the beginning. I mentioned 2 things, that you are, you with this construct, you are serving 2 parts of the economy, but leaving out a very important middle part, who is become a very potent force in the economy and who have their aspirations. That is one point. The second, I don't agree with Pranav. See, banking, when you are in the business of banking, you are in the business of taking the risk. Because there is a risk in opening huge number of accounts, you run away from that risk. That is not the banking. You have to manage the risk. Today is the technology. If everyone else in the country is managing, you cannot say that I don't want to take the risk. I don't buy this argument. You mentioned something about Kotak. This is why I'm mentioning. It is very unusual for a competitor to mention on a public platform. And I have seen Mr. Jay Kotak commented on this on a public platform, which is very unusual. It shows that what is the general feeling. So I fully agree. I don't see this trend coming that everyone is going to follow this. I hope even ICICI Bank will have a reflection, introspection, and may do some changes in this. But I don't see this is going to be a trend. But where this to become a trend, I would say yes, RBI as the regulator and looking at the overall economy has to step in. Not only that, there is one part is RBI. There is another part, the government, the central government, state government, and they do a huge transaction with various banks. They keep an approved list. If there is a feeling at the political level that this is something which is not friendly for a common man, for the philosophy of inclusion, then governments also have their own, means and the relations which they can do. I agree, regulations cannot be suddenly changed, or it cannot be, but there are ways and means of conveying a message. And that is how I would look at it.
You think a moral suasion?
You rightly mentioned, then why should I, go and open an account? See, this revision in limit has come with a host of other charges. Some concessions are given with this fee, but at the same time, some other things are levied. Now, there are steep charges if you do at the cash transaction at the branches in the new construct. But at the same time, even banks ATM, if you operate, after certain transaction charges are same, they would have charged when you operate on the other bank's ATM. So you say, don't come to the branch for doing the post transaction. Don't go to the ATM for withdrawing the cash. I mean to say, one can argue that we are doing all this to promote the digital economy, but that is already happening in any case. So I think what I'm trying to say, optically, many things are looking so bad without really deriving a great advantage to the bank.
I think the optical impression has not been positive at all. But that is exactly why the investors like it, because they think that it's going to bring in margins. Just one sentence, Pranav. Do margins go up?
The balances would go up. So just a couple of data points. I think one is you have the average savings account balance for a private sector bank in a metro area is about 90,000 rupees, right? So bringing it to 50,000, I think is more like saying, I want to be the primary bank. So that's the statement that ICICI is making. So if you're moving to us, we want to be the primary bank. Otherwise, you can take the business elsewhere. Which I think is probably a right move because from a cost benefit point of view, a savings account bank today makes sense for a bank only if you are using it as a primary bank. Okay. And also this becomes the only way to compete against the public sector banks in some sense because the attrition of deposits has been slow. This will force it. So I think it's a positive move for the bank.
Okay. Well, that's a fair point that they only want primary accounts. That a source in ICICI actually told me that. But I am only saying it becomes a public interest issue if all banks were to say this, Pranav. I mean, would not the government of India be forced to move? Or if it becomes a divisive point between private and public sector banks, then again, the regulator and the government of India may have to sit up. So I think much will depend on whether it becomes a trend. Doesn't look like right now. Unfortunately, out of time. But thank you very much, Mr. Mundra and
Latha,
Pranav.
could
Yes,
I
sir.
just one final sentence which you mentioned that investors would be happy. Banks don't exist only for the investor. There's a term like stakeholder.
Okay.
Depositors are major stakeholders in a bank. Let us keep it in mind.
Fair point. Of course, of course. And so is the regulator and the government when it is as vital an industry as banking. I take your point. So would ICICI. We'll see how this goes. The governor's first statement has been very neutral. So it looks like at best the RBI may give a moral suasion nudge, but nothing else. That seems to be the present situation. Wrap up on Bazaar on that note. Thank you very much, Pranav and Mr. Mundra. After the break, Chartbusters.